Oh, hello everyone, and welcome to today's Forex session. Thank you for your patience. David had disappeared, and he's the only one who can start the webinar, and I couldn't find him, so I do apologise for the slight delay in starting this session. But as always, before we move on to the charts and looking at what is happening in the markets, may I just draw your attention to the disclaimer that I know you can see on your screen. As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. It's good to have so many of you with us today. I've had a quick look down the list. I can see we've got some of our quantum users. I know we've got some of our Forex program students, and I know we've got people who well, I don't recognize you, and perhaps it's your first time here. So if it is your first time here, if you'd like to make yourself known, it would be lovely, and tell us where you're from. But if it is, as I said, if it is your first time, what we're going to be looking at is obviously the Forex market, and we're going to be looking at it on the charts using the methodology that we call a volume price analysis, which is looking at the price action, how it interacts with the volume to tell us basically whether what we're seeing on the chart is genuine or not. But what we also have to look at is the fundamental landscape, because the price chart doesn't move in isolation. It has all sorts of factors and drivers which are helping to push the price one way or another. And for the students who have taken our program will also know that we just don't, we become chart readers. We understand when the fundamental news releases are going to be hitting the wires, so, we can take account of them, but we also have to look at related markets. And it has made us, and has made Davis chuckle a lot these last weeks and months, because you can't get away from articles, commentary about the bond market, and you think, well, what on earth has the bond market got to do with Forex and stocks and what have you? Well, it has a lot to do with it, and the students who are on our program know exactly what the bond market will tell you, what signals it is giving, and those signals then translate into what we call risk on, risk off, assets that are going to be impacted more by the movement in bond yields and bond prices. And how does that reflect into the Forex market? Well, there are currencies that reflect the market sentiment. So you will see certain currencies such as the Aussie and the Kiwi either being bought or sold, and money going into the Swiss franc, which is a safe haven currency. So as you can see, everything is deeply interconnected and interrelated. But as I said, having seen so much written recently about the bond market and bond yields, and I have to, bond auctions didn't even mostly appear on economic calendars. Well, I'll tell you, there's a big one coming today, which is for the 10-year. Tomorrow there's a 30-year. This is the treasuries, of course. And the reason why the Nasdaq suddenly shot up yesterday was partly given because the 3-year auction went very, very well. I'll explain a little bit more about bond yields as we go along, and how, why you really have to know what's going on in the bond market. Meantime, VPA, which is where we always start on the charts, it is actually made up of, it's got 5 elements to it. Volume and price, obviously, we've got candles, candle patterns, and support and resistance. Those are those hugely important levels to the market, to other traders, to the institutions, to the market makers. We have to find a way of identifying them. We do it from a price-based and a volume-based perspective, and we've developed particular indicators to do that. But you can use Fibonacci, you can use a Bollinger Band, you can use moving averages. So there's all sorts of ways of looking at support and resistance levels on a chart. And then you go back to looking at the price action at those levels. What is the volume doing? Is that level going to be breached? Is it not going to be breached? These are all part of the narrative that makes up chart analysis. And we'll have a look at some of that when we look at the charts in a second. Right, as I said, we have developed particular indicators for the Forex market. We say the Forex market is about flow into individual currencies and individual currency pairs, and also levels and flow. And to help us track the flows, these are the indicators that we have, as I said, put together. Individual flows into individual currencies, flows into the pairs and the relative, and which is the strongest and weakest in the pairs. The strength of those flows is measured by the currency rate, and then we have a heat map which looks at those flows, that strength and weakness across multiple time frames. And we've got something rather cool to show you with the heat map version for TradingView, and we'll have a look at that when we move over to David. Now, of course, if you've got any questions about anything we say, statements that we made, you're not sure about something, or you want to find out a little bit more, literally just drop a message into the chat box and we'll answer your question. Finally, as well as the program, you can now apply, for students of the program, you can apply to join the funded program, which is basically with no risk to yourself, because you're not going to be trading your money, you're going to be trading our money. You can actually put that knowledge into a practice, and you know, there's different levels of the program. David will explain that as we go through the session, but essentially you start with either a 5, 10 or 15,000 account, and you can actually trade your way up to managing a $2 million account, as I said. But there is no risk to you, because you won't be asked to put your money into the fund. Okay, that's what I've got to say on that. Where do we start? Right, the first thing I want to start with is the hourly. This is my dashboard, actually, what I call my dashboard. There we are, just to make that my 3 time frames. I've got MT4. David has, have you got, what have you got? TradingView. And then, oh, David's got everything: Tradestation, TradingView, and Tradestation. So you're going to get the full complement today. Essentially, I use MT4. I use it for the analysis that you will find on the Facebook page. I have a personal one called Anna Cooling, and you'll get more general stuff about the markets and what have you. And there's a lot of stuff there about articles about the bond market. There is one called Learn Forex Trading, and that's where I will post up a chart analysis, what's been going on, what to look out for, why things happen. And I've used MT4 because it is the platform that a lot of traders still use. Although I have to say, you know, TradingView is probably, would you say TradingView is catching them up now, David? Would you say TradingView? Yeah, I would say so as well. But anyway, let's stick with MT4. It's really straightforward. It's a really nice platform. The volume profile on this particular one, this is from XM, I think is exceptional. And as I said, and in some ways, when you're starting, you are with this platform, you're restricted on timeframes, and that's not such a bad thing, because we have to use multiple time frames. And sometimes when you have too much choice, it's like going into a supermarket and all you want to buy is a bar of soap, and there are 50 bars and you really don't know where to start. Whereas here, we know what the time frames are, and it's a little bit of discipline, if you like, because one of the things we have to be aware of as traders is, well, you know, you obviously choose the time frame that you like to take your trade on, and what sometimes happens, and often happens, is maybe the trade doesn't go, it goes against you. And so what you tend to do is then you go up and down the time frames, really to find confirmation that you were actually right in your original assessment. Now, sometimes that does happen, and you know, you could be on the let's say the 15-minute or the 5-minute, for example, and you see a potential and you think, oh right, what's going up here? Well, the Aussie is selling off, you know, rather nicely, so I'm going to go short the Aussie, you know, or I'm going to go short against it. Oh, well, okay, well, this is the Swiss franc. Oh, I like that. I'll buy the Swiss franc, and you know, you see a setup, and maybe for whatever reason, it's, you know, it's a pullback, if you like, in a trend where the dominant trend is not the sell of the Aussie, but it's actually a buy. It goes against you, but you don't close out. You think, no. So you go up, maybe you go, I don't know, right up to the daily chart, and you look at the daily chart and you think, oh, actually the Swiss franc's selling off. Well, the Aussie is kind of going nowhere, but it could go up. I think I'll leave it on, because, you know, and that's what I'm saying is, if you have lots of time frames, you know, that's what you can tend to do. So if you like, a trading position becomes what we call a strategic investment, and you really have to avoid that as much as possible. Right, the hourly chart I have here set up is great. It just tells me what's happened, what is happening now, maybe what is going to happen in the next sort of hour or 2 hours, and certainly as before we come to the start of the US session. Well, as I said, we've got looks like the CAD is on a bit of a buy. Be aware quickly before we carry on. We're going to have a quick look at the economic calendar. I've got two. I've got Financial Juice, and I've also got Forex. Where's Forex Factory? Here it is, Forex Factory. Let's start with Forex Factory. And there we are. Actually on Wednesday. There we are. What have we got today? Right. Yes, the Canadian. I've mentioned the Canadian. The first thing to be aware of is actually a rate decision today. So that's something to factor into, not necessarily a trading decision, but to factor into if you are going to buy the CAD and it looks like a great setup, just be aware that, coming up at 1:30, which is fairly soon, you've got a big piece of news coming up. So you might, if you're in profit, you might want to come out and then wait for the market reaction to die down. When I said about the bond auction, well, the 10-year one is not till 6 o'clock tonight, so that's going to have probably a bigger impact on Wall Street. And then tomorrow, I did know this because I looked it up. Where is it? Where are we? Yes, there's a 30-year one, which at 6 o'clock tomorrow. And as I said, the 10-year is really the yield that it sets the tone, if you like, for risk, if you like. It's not too short and it's not too far ahead. So that is going to be a big day today. Now, up until very recently, most people ignored the bond market, didn't know what it was about. And it's been relatively quiet, and it's been quiet because interest rates have been going nowhere, because of QE, because of deflationary forces, etc., etc., etc. Well, everything has changed, and it has changed quite dramatically, and it's causing rotation in stocks. It's having a huge impact. The bond market is the most powerful of all the capital market. So what's happening on, well, the futures are back up again. I mean, the Dow was up, tremendous amounts the other day. As is the NASDAQ, that was right. That went ballistic yesterday. Let's have a look. Where is it? Yes, it went up 464. But if you look at the daily chart of the NASDAQ, which consists of what's called growth stocks, momentum stocks, you can see there's a lot of volatility here. Up one day, down another day, up one day, down another day, up another, etc. It was great for trading, but certainly for longer term investors, it's a fairly sort of they're having a bit of a rough ride at the moment. Right, so where are we? So that's the dollar. So you might think, well, I think I will discount the CAD for the time being, because, as I said, in a couple of hours or so, there is this important rate decision. So what is going on? What I don't like to see is I don't really like to see all the currencies sort of stuck in the middle here, and I don't like to see the values on the matrix quite so low, because it's from experience, I know this is below average, and what that tells me is prices are moving, but they're very, very narrow ranges, and that can always make trading very, very tricky, and you've really got to grind out the pips. The good news is with this particular indicator that on the Trading View version, and it will be coming up on the others, is we've upgraded it so that when you have a value, not just on the hourly, but on all of them, that one is -13, and that will tell you, is that average for this time frame? Is it low or is it high? So you've got kind of some kind of benchmark. But looking at these lines on here, they look pretty, they look pretty, they don't look very appealing. What we want to see is some big divergence. We want to see some, we want to see one at the top, one at the bottom, some nice strong crosses in the middle. And we know we've got some decent movement in the market, and we want to see these numbers, a bit higher than they are at the moment. Having said that, from what happened this morning, it was really the British pound. I've got a couple of other things to show you, from a VPA perspective, and also the setup that I have for my MT4 version, and that is this. I have 5 charts. I have a daily, I have an hourly, I have a 15-minute, 5, and I have a Renko chart, which is a non-time based chart. And this is set at 3 pips, which means that every one of these little candles, they're not called candle, Renko means brick, has a value of 3 pips. So it closes once the 3 pips has gone through the market. So if the market is moving fast, what you will see is you will get lots and lots of bricks come out very, very quickly. When the market is very sluggish, 3 pips, can take a long time. But what it gives you a sense of whether there's any movement, whether there's any momentum in the market. Because when there isn't momentum, when there isn't movement, the longer you are in a position, then the greater the risk of some unexpected event. And there are always unexpected events in the Forex market. As I said, you've got expected ones such as fundamental news, or something happening in another market which may have a direct impact on one of the currencies that you are trading. Momentum, if you understand it and you know what is happening on the chart, you can make it work in your favor. But if and seeing that represented in a chart such as a Renko is really very, very, very much to your advantage. Right, going back to this 5 chart setup, we've got the daily chart here. We can see the cable really came off since this nice strong candle, shooting star candle, where we have the price try to rise, it falls back, reasonable, decent amount of volume underneath it, and then we had these 2 big sort of down candles. So there's a great two days for actually selling cable, and it coincided with, where have I got my no, I haven't got it here, the dollar index. Obviously, this is one of the majors. What you'll be looking at is what is the dollar doing, and you do that via the dollar index, which I have here on one of my other profiles, and I'll bring up and show you because that's been interesting as well. We had a bit of sideways, then we had a further fall as the dollar strengthened, and now we've had this attempt to rise. With the dollar, when the stocks are doing really well, you will find generally the dollar will weaken. When the market is very much risk off, you will find the dollar will strengthen. There's also something else, and I mentioned this to our students in our VPA chat room, and that is on a cyclical basis, when you have a democratic government in the States, the dollar does tend to strengthen. And what's curious is that at the moment, the dollar shorts are massive. There's a huge holding at the CFTC of shorts, basically. So partly we could be seeing a dollar squeeze. We could also be seeing the fact that markets are very, very fragile. Are we going to see a major correction? Is inflation? So it's all helping to drive the dollar. But the daily chart for cable at the moment is really not very appealing. It's not very appealing because there's no real direction to it. It looks at the moment, if it were to stop now, it would be a doji, which is indecision. What it actually is, because it's not going to stop, is we have a wick to the top, we have a small wick to the bottom, we have very, very narrow price range in the middle. So that basically tells us that we are going sideways, and I know we're going sideways because if we expand the 5-minute chart here, the 2 lines of the currency, the CSI, they're both going in the same direction. There's no divergence. We need divergence. We want one, ideally both currencies, one moving one way, one moving the other, but there's no strong divergence at the moment. So let me just take that down a minute. So that's the daily. So that gives us a sense of the trading conditions that we can face. The hourly chart I have here, the reason I have this one looking this way, I don't have all the indicators on it, is because I want to see my levels, going back to my levels. These are price-based levels that have been delivered by the Camarilla, and these levels on this chart are valid for the rest of this week. And what is important at the moment with the price action is that it is at this 3rd level. This is the 3rd resistance level. The 3rd level and the 4th level of the 6 levels that the indicator produces are possibly the most important levels that the ones that you should consider and really be aware of, particularly if the price action is anywhere, is coming towards it, because I can guarantee you that's where it will stop, pause, think twice, and if you get the volume coming in, it may resume and it may or may not. The indicator always works. It also gives you these little messages here that you see on the top left hand corner, and it says a possible short position. Why? Because it's failed to carry on further off the R3, so the indicator thinks again and thinks, right, well, it's failure there, possibly there is a reversal, and we will see that with what's happening with the CSI. So those are my levels for the week. I then have the, sorry about that. I have the 15-minute chart, and the levels I have on here, these are daily. So they're obviously, they're refreshed at rollover. And the significance of having two different levels and different values is because when you get a confluence, so if you have the price at say approaching an important level on the hourly chart, we know that's going to be strong, we know that's going to be important. But if that coincides with an important level that we see on a faster time frame and vice versa, we know, hey, this is significant, we've got to pay attention to it. Now on here, I've actually got the volume point of control, which is a volume-based support and resistance, and I can see that the price is at the VPOC, the volume point of control itself, which is this yellow line. This is a fulcrum, and this tends to denote, well, it does denote congestion. It's also volume and price over time, and we can see this. It's a bit like what you call it, a bell curve. So you have these sort of fat bits and you have these thinner bits, and where you have these very dense, we know that's a very dense area of volume over time. Now, what's interesting is with the VPOC also acts as either bullish or bearish. So if the price is underneath it, it will add its own bearish pressure to it. So that's where we are. And then now going to the 5-minute chart, where I have them all on here. What am I seeing? Well, I've had a little break away from the volume point of control on this time frame, but I'm still looking, moving sideways. Well, certainly the dollar is, but I've got the sort of pound maybe turning lower. I'm looking at the volume under the up candles, as I see here, under the blue candles. I've got these two blue candles here. Well, there's not much, volume was going down. That was lower than that one. If it was going to carry on, you would expected that at least to be the same or higher. These two candles are anomalous because they are up candles. They've got wicks to the bottom of them, and yet the volume was falling. So what does that tell us? As again, it's anomalous. Price and volume have to be in agreement if you are going to get a genuine move. Is it a genuine move or not? And lastly, the Renko. And one of the questions I was asked by our students, well, how do you put all this together in terms of entries and exits? And it's really very, very straightforward with the Renko, and we've developed it this way. We developed the trend dot and the trend monitor, and basically what we are looking for is an agreement in color, in brightness of color, between the trend dot and the trend monitor. And when we have it, and you're happy with it, and you use it in conjunction with what you see on the time chart and the other indicators, you can then decide whether to take a position or not. And once you're in a position, the great thing about Renko is it then keeps you in these pullbacks. You may get a change of color on the trend dot, but if the monitor stays the same color, this is in this uptrend, then there's no reason to close out. Now, exiting is rather different, because here I would say once you're in a move and it's kept you in the move, you're always obviously monitoring what is happening on the chart itself. And if we look to the chart here, this is the move that we have on the Renko. As we can see here, if you want, this is the point on the Renko when it turned higher. We've actually got a bullish engulfing candle. It got up to the S3 and it's carried on higher. It's a bit of a messy trend, as we can see here. Lots of little down candles we can see in the trend. but look at the volume under the down candles. You know, is it consistent with the candles that are there? The answer is no. But having the Renko next to you is it's a bit of a comfort blanket. So we go up. Now these two candles here are quite interesting, because you have a lot of volume. They think, oh great, there's going to be a reversal here, because candle range and spread and volume. But look at the time. This is the London Open. So you're always going to get a rush of volume at this time. And if you look at the average volume following the London Open, it's higher than the pre-London Open. So you have to be aware of when you see the signals on price and volume around session crossovers and new sessions coming in. You have to be aware that, you know, they're not, you have to read them in context. Not that they're not valid, but you have to look at them in the context of, you know, when that volume came into the market. And if we look at the Renko chart, and as I said, it will hold you in, this was this pullback. You won't have the volume on here, but the price action, yes, you did have this, let's just make that bigger. You did have this, pullback back to, as I said, back to the S2. And we did have a couple of red dots, but everything stayed bright blue. So if you like, using the Renko in conjunction with the price chart will help you, you know, as I said, to stay in the move. It then goes higher. Exit. Right. I hope you can see this. This is actually a shooting star candle, which is off the R2. And looking at the Renko, and you'd have also looked at the CSI, this is this point here. So when you see, you know, this has been carrying on, this is blue, 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 but then you see a strong candle, maybe on a time chart, you can then decide, you think, do you know what, I think maybe it's been a great move, it's kept me in here, but that is such a strong candle on the time chart. I'll wait to see what happens. So we had the bricks going red, the trend dots are at the bottom, the top of the bricks, because they move. They also give you a clue as to what is going on. And you could say, well, rather than wait until they match, which is the red and the red, you could possibly, you know, say, what, come out here, and that's it. So with regard to entry, you can either be quite conservative and wait until you have the two bright blues together, but if there's a strong candle on the time chart and this looks as though it's moving higher, and you're in the volume, and as I said, we had a 2-bar reversal. We had not a 2-bar reversal. We had a bullish engulfing candle there with a decent amount of volume underneath it, which is at the let's have a look. Where are we? What's the level? At 38.45. Let's see where that concerns are down. 38. Yeah, we've got 38.47. So that candle there configuration would have happened about this point here. We're about 2 pips out, but that is, so you see that, and you see the volume, and you look at the Renko as well, and you think, yeah, okay. But you know, you think, well, you know, that might not play out. It, you know, I got the S3 up ahead. Is it actually going to get there? I'm maybe going to be a little bit more conservative. You could wait until you have stronger confirmation that you have here on the Renko, then it's bright blue, and away you go. And then when you have these pullbacks here, particularly this one at the London Open, you know, the Renko can hold you in. We sometimes say, you also say sometimes, well, when you have these session crossovers, should you close out? Some traders do, especially if there's volatility, but there was no volatility in this chart today. There's no volatility candles on these two candles. Often at the London Open, you will get volatility, and by volatility candle is this indicator will fire these purple arrows, and that tells us that this price action is outside of the average true range. But if you don't have the volatility candles trigger, yes, you have the additional volume going in, but it is the London Open. The Renko says hold for the time being, then why not? Now, at the moment, what is happening now? We've had a little bit of congestion, as we know, because we are at the S3, or the R3, I beg your pardon, on the hourly chart. We've got this sideways move. It's quite, as I said, this is what I said before, you know, looking at these colors, this actually changed earlier, but you had a little pullback against it. But you think, right, okay, I can see the S3 on the hourly. Is this going to go lower? Possibly. Do I want to be a little bit more sure that this is going to be a potentially nice trade to the short side? As I said, you could possibly wait until, let's have a look at this, down to levels. It's points where you think you might want to go, want to get in. And what's this one? That's the 15-minute. Let me have a look at the 5-minute. Here we are. Let's have a look. There we are. We've got the VPOC up here. It's kind of maybe sort of wait to this point here, wait till the S1. Use the levels as not just where the price is aiming for, but also as potentially where you think, well, if it breaks through there, there's a low volume node there. It's quite a nice bit of travel then down to the S3. And as I said, breaking below the R3 on the hourly chart would give you an awful lot more confidence. And finally, quickly looking at the dollar index, which I should put on that chart actually. Yep. As I said, I mentioned this in our VPA as well. It's been on an up ever since the decision, if you remember the runoff for the Senate in Georgia in January, which has resulted in a tie in the Senate, giving the vice president the casting vote. In effect, it gives the Democratic Party control of both houses, and that's when really the buying of the dollar sort of started to come in. So there it started to come in January. It kind of went up, but then we had a lot of buying under this candle here, under this hammer candle. Then we had the break from the volume point of control. But I also said this was Monday, we had this really strong update for the dollar. I said it's hit the R3, expect a pause, and in fact we had a reversal. That's actually a shooting star candle. We're going to have to wait and see what happens, and basically we won't know what happens to the dollar until we have that bond auction today, that very key, very important 10-year bond auction.
Thank you, darling. Very warm welcome to you wherever you are in the world. Hopefully you can hear me okay. Got my microphone on. Yes, the only question I didn't answer was the one on the matrix from Brad, I think. Sizing of the matrix. I've got, as Anna said, I've got all three platforms up. I've got TradingView, and this is Tradestation. I've also got NinjaTrader behind it. Probably if we start with Tradestation actually, and I'll pull over the developments we're doing on TradingView in a moment. This, for those of you who've not seen it before, this is basically TradeStation 9.5. Hold on a minute. Hold on a moment. I'm just going to switch off for a moment. Apologies, I had reverb in my. That's better now. This is basically the partnership between Interactive Brokers and Tradestation. So if you have an Interactive Brokers account, you now have the facility to link it straight through onto Tradestation, and we've developed the indicators for this particular platform. It's immensely powerful. It means you can trade through the platform itself, onto Interactive, and obviously you can trade any market that Interactive offer, including spot Forex and everything else. What I've got here, I've got the currency futures. I've got the 6A, which is the Aussie dollar. I've got the 6B, which is cable, pound dollar. I've got the 6C here, which is CAD dollar, not dollar CAD, so it's the inverse. So it's CAD dollar. I've got the euro dollar here, the 6E, and the 6N is New Zealand dollar. And over on the right-hand side, I couldn't quite fit it on, so I've got the Swiss dollar here. So basically, the beauty of looking at this particular array, if you like, is that you're looking at a complete focus on the dollar, because it's all dollar-centric, and the dollar is the counter currency in each case. And what I've also put on here, as you can see, the indicators we developed both for radar screen, which is immensely powerful, and also on the charts themselves, of course. But on radar screen, you have this wonderful ability to put, I've got three on here, but you can have an awful lot more. There's the CSI you can have on here, which shows you overbought, oversold, crossing, all sorts of things. So I've got the volatility indicator on here, which tells me how many bars ago it was on the various timeframes down here, and of course you can have any time frame you like on here. So you can run your eye down here and you can see straight away we've got one that's just come in on the CAD dollar on 1 minute. We have one down here on New Zealand dollar 6 bars ago, and so on and so forth. So you don't have to hunt around charts all the time. And because these are also symbol and interval linked up here, it also means if I click on any of these, it'll automatically change over here because I've got them symbol linked over here, not this one because that's these dollar Swiss. So you can basically flick on these and you can go through them very, very quickly indeed. What I just wanted to show you was really just if you like, this is a no-brainer trade, and it's what you're always looking for. This happens to be a scalping trade, but it could be in any time frame. And this is on the 3 minute for cable. We had this terrific rally this morning with selling of the dollar, and I have to say on the daily charts, as far as longer term time frames concerned, we are selling the dollar, and we've got a whole bunch of we're selling heavily on yen as well, which we've been holding for months now, and they are hugely profitable trades because all the yen pairs have been on a tremendous rally, and we're still holding those, and that's on the expectation of risk sentiment continuing in equities. But this is just a very simple example on the 3 minute. As I say, this is on Globex on the futures contract, but it could be on spot, it could be on any contract, doesn't matter what it is, could be spot, anything you like. Your eye is immediately drawn to either very low volume or very high volume. In this case, it's very high volume. It's this candle here, sticks out like a sore thumb. It's absolutely massive. What is it doing? Well, you've basically got 3 candles here. You've got the trend up, the little run up here. It was bullish up until this point, but you then get this arrangement. You get a first candle comes in, okay, price and volume are in agreement, but then you get the second one. You've got double in fact, more than double the volume, and you've only got, what, 2/3 the price maybe. That's anomalous. Why is it anomalous? Because if that was correct, and there's no reason to suppose it wasn't correct, then this candle should have been at least double the size of this one, if not more. So the price action should be off the top of the chart here, should be up at 15 or 20 or so. So that is telling you straight away that there's some heavy selling in there. Why is there selling in there? Because if it was buying, the candle will be up the top of the chart, and it isn't. It's compressed. It means the market makers, the big operators, whatever chart you're trading, they are selling into weakness. They are dumping out basically big time, and the market's not accepting it, but they're just selling into weakness, and hence the spread of the candle is pretty weak. Next one goes up a little bit, but you've got a wick to the upper body. That's the sort of price action you're looking at. Obviously, what you're looking for is across all the various time frames, but it just gives you that low risk trading opportunity to actually make money when you're 95% confident of what you're seeing on the chart, and it's not an 80% trade or a 70% trade. It's pretty confident. You've seen heavy selling coming into the market. It's not a question of if it's going to reverse, it's a question of when. On this occasion, it happened to reverse pretty much after the last candle. There's nothing to say that this could have gone into congestion over here and then ultimately reverse lower. So there's nothing in the rule book, and that's just trading. You just have to accept that fact, put a wide enough stop loss in to allow for any buffering that goes on. But given the amount of volume that's gone in there, that is what you're looking for. It's pure anomaly. We're either looking, there's only 2 things we're looking for in volume price analysis, very simple. We're either looking for confirmation or we're looking for anomalies. And that's all it comes down to. And from there on, all we are looking at is the analysis of whether it's buying, whether it's selling, how heavy is that buying, how heavy is that selling, what other factors are coming into play, what levels of resistance or support are we at, are we on the Camarilla levels, what is the CSI saying, what is the matrix saying, what is the array saying, all these things then come into play, but it's basically down to the chart. And then of course, as that move develops, we've got the trend monitor on here, the trend dots change straight away, they roll over. When the market is in uptrend, then the dots are going to be below. As the market starts to either go sideways or reverse, then they're going to go through the body of the candle and they're going to appear at the top. In other words, they're pressing down all the time. And they are always the first to change color. It's because they work very close to the price action. The trend monitor down here changes more subtly. Why? Because it is taking it's looking at this perspective from a longer viewpoint, if you will. It's not, these are very close to the market price action and therefore change very rapidly. The trend monitor takes a more considered view, and it then goes through the, it hasn't gone through the full spectrum. In fact, it has, did go in there. So we've gone from bright blue into darker blue, into darker red, and out the other side into bright red, and that's the full sequence of events. It's exactly the same way Anna was showing you earlier on in terms of Renko, how to use it. Works in precisely the same way. The trend dots will always change first. The trend monitor will then follow along behind that, and then it just gives you that confidence to stay in the trade, because this business is about confidence. You see the little reversal here that came. The trend dots went into white, in other words, congestion phase. Then they went into blue. They're starting to look as though it might be a little bit bullish. This might be a longer term reversal. But what is the trend monitor saying? Absolutely nothing. It's just staying bright red all the time. It's not changing. It's not recognizing the fact that we've had a little pause, had a little bit of congestion, but we're still in bearish phase mode for the time being. And that's how to use the two indicators together. They are complementary. They should be used together all the time. Just scroll that back, see where we're going. This is on 5 minutes, so the Canadians got right up into overbought. Obviously, we've got that news later on there. But you can basically click on any of those. So you want to go and have a look at this one, for example. This is on CAD dollar. There's our, there we go. There's our volatility candle that came in. We know what's going to happen with volatility. We expect one of two things. We either expect congestion or we expect a full-blown reversal. In this case, we've got congestion. We've got the volume point of control here, so we know this market isn't going to go very far, even if it is going to reverse, so it's hardly a trading opportunity. It's just going to congest around the volume point of control for the time being. Still bearish on the trend monitor, but it's just a great way of visually seeing everything on the radar screen, because when everything's red or when everything's blue, it tells you instantly what is happening with the dollar. You can see the dollar here climb. We had heavy selling in the dollar this morning. The dollar is now rising. I'll pull it over on TradingView in a minute. But you can see the dollar rising strongly. And that is why all these sells are gradually migrating to red. This buying of the Aussie dollar is obviously buying of the US dollar is obviously reflected in selling of the primary currency, in this case, the Aussie. So these sells here are gradually changing color. So we've got bright red. So we know on 135, the trend monitor has already changed to a bearish sentiment. It's in color phase change on 10 and the same on 15. In terms of the pound, exactly the same thing. It's starting to fall through the time frames and therefore reflect the fact that this is developing, this trend is strongly developing. When we get down to the CAD dollar, it's not so well defined, it's not so clear cut. And the reason for that is if you look over here on the CSI, the Canadian dollar and the US dollar are rising together. And therefore, the strength of trend on that particular pair is going to be much less strong than on these ones where you've got a currency in opposition. So you've got the Aussie falling quite strongly, but the dollar rising nicely. On the pound, similar sort of price action. The pound is selling off and the dollar's rising. So on these two pairs, you've got a nice strong trend. When you come down to this one where you've got Canadian dollar, it's less strong because they're moving in the same direction. And that's what you expect to see. And the same is also true down here, to a lesser extent, the euro dollar. But the euro and dollar moving the same direction, it doesn't mean there won't be a trend, but it's not going to be as strong as the trends where the two are moving in opposition with one another. And down on the New Zealand, similar sort of thing, it's flowing through on the various time frames. So this works in exactly the same way on Tradestation 10, which you'll see later on with Anna when we do the stock webinar. The radar screen is immensely powerful. You can have up to 400 cells on this particular arrangement, and on Tradestation 10 and above, you can have over 1,000 cells all running. And basically, you're looking at sort of mini charts. When you link them in this way over here, it really is immensely powerful and very quick to do analysis. Let me pull over the trading view. Here we go. Just pop that up. There we go. This is the dollar. That's what you're looking at just now with Anna in terms of there we go. That's on the daily. This is on 1 minute. This is on, what have I got this one on? 3 minutes. This is on 5, and this is on the daily. So basically looking at a nice array of the dollar. What is going on? You can see the dollar buying here came in. This was the sell we had this morning. Now we're starting to see some buying coming in. But over on the daily, the longer term, we've got this big bearish engulfing candle here, and longer term, we're looking for a possible reversal on that and further selling of the US dollar as a result of that. In terms of the indicators, I know some of you are familiar with this, some of you are not. We've been working on getting these ported across to TradingView for the last few weeks. I have to say it's not been straightforward, but then programming never is. And there's always something that's going to trip you up, but we are getting there. This is the currency array. This is on 3 minute. This is not available at the moment, but it will be available in due course. So in other words, on TradingView, we will have exactly the same complement of indicators as we've got on MT4 and MT5. So we've got the array here. This is on 5 minute. Works in exactly the same way. I can toggle on and off, sort out, see which sort on a particular currency. You can see up here CAD Swiss. There's a lot of selling of Swiss franc at the moment, and you can see why. In fact, if I remember how to do it, let's see. Yeah, here we go. Filter on. Let's filter out on the dollar, on the Swiss franc. There we go. There we go. And you can see what's going on in terms of Swiss franc. Heavy selling of the Swiss franc, which is a sentiment currency. We'll hop over and see what's going on in terms of US equities in a minute. But it just gives you a really nice view on what is going on in terms of a particular currency, the strength of that. First of all, the sentiment across the market on 5 minute. The market per se, everyone is selling the Swiss franc. Doesn't matter why they're selling the Swiss franc, just accept the fact they are. The strongest trend is on the CAD Swiss. The weakest, if you can call it that, is on the pound Swiss. So it just gives you a straight through view on that. You can see Swiss yen down here at the bottom, so they're selling on the Swiss. So you've got all these stacked up at the bottom. This one down, these up at the top, this at the bottom. In addition to that, up the side here, you also get the same as on the other platforms, where you're getting signals of whether a currency is either at an overbought condition or is approaching them. When they're approaching them, they come up with the brackets around the outside and just an OS. If that moves to oversold, it becomes bright red and the brackets disappear. So you've got these signals up and down here as well, but it just gives you a terrific view. And then over on the right-hand side, we've got the currency matrix. And the one thing we've added to the currency matrix, again, it tells you about sentiment. This is on, I've got this on, that's on 5, this is on 3 minute. What we've also added to this, which we're going to obviously port over onto the other indicators, is this all-time high and average up here. So when you see, this is exactly the same principle applies as on the CSI, where you get to overbought and oversold. It just gives you a view on how much further that particular currency pair may have to travel before it gets to an all-time high. Is it at an average, or is it approaching an all-time high? You can see here it's between 7 and 8, so it's got a little way to go to the all-time high. Down the bottom here, we've got the same thing, all-time low, 9.5, average is 6.6. So you can infer from that that it's pretty heavily oversold, the New Zealand dollar. In fact, this is changing all the time. So we're getting down into some new territory. It's very heavily oversold, pretty heavily overbought up here, although it's got a little way to go as far as the all-time high here is concerned. It just gives you a flavor of those important areas when you can think of not just the currency being oversold or overbought, but the currency pair itself being overbought and oversold. And in addition to that, when you tie it back to the currency array, that also gives you that information too. This is the one you haven't seen before. Just pull this over a little bit if I can. Where are we? Go. There we are. Oops, too far. Sorry about that. Oops, that's squeezed up. Just ease it out a little bit. There we go. Let's pull that over there. Pull that one back a bit. There we go. This is the currency heat map. This is hot off the press. Just come out from the development team, who are just superstars. The major difference with this is, well, there's two major differences. First of all, and I won't bore you with why, but it was not possible to replicate the number of time frames that we have on MT4, 5, NinjaTrader, and Tradestation. It was not possible within the confines of the Pine script. However, what that created then was an opportunity to do something different. As you can see, we've only got 5 time frames here, but the big difference is we can actually configure these to whatever we want, which you can't do on the other platforms, not yet anyway. We will investigate it. We don't know whether it's possible or not, but it's certainly possible in the Pine script. So what you see here is you've got this heat map, which has got 1 minute, 1 hour for 1 day and the week. And over on the right-hand side, I've got this as 2, 5, 10, 15, and 30. So this gives you the opportunity to really configure it to whatever it is you're doing. If you're an out-and-out scalper, then you're going to have it down on these time frames. You might even go sub 1 minute, but you might have 1, 2, 3, 4, 5 strung across here. And that will give you a really nice flavor of, first of all, what is going on sentiment across the cells. So you don't have to hunt around the charts quite so much. It tells you straight away where the strength and weakness is, how strong that strength and weakness is, and whether that strength and weakness is actually going out and moving across the cells. So you'll start with one color here, and then we'll gradually migrate out across the cells completely. You can see the selling down the bottom here with pound dollar, and the cells are red right the way across the piece. We'll also look at possibly incorporating the all-time highs and lows aspect of the currency matrix over on this as well in due course. But that's basically the principle of it. And then, of course, the beauty of it is these are all weighted. So if you're looking at a really fast time frame array like this on the heat map, where you've got these very fast time frames, clearly what's going to happen is that these pairs at the top and bottom are going to move much more quickly than over here, because in this scenario where you've got a very slow time frame of a week and a day, those two time frames will carry more weight than the 4 hour and the 1 hour and the minute. So these will move much more slowly rather. Whereas over here, I mean, if this was 1, 2, 3, 4, 5, these would move pretty rapidly. Nevertheless, they will still be weighted according to the significance of the time frame. So whatever the slower time frame, that will always carry more significance, whether it's 5 minute versus 3 minute, or 30 minute versus 15, or a daily versus an hour. That is the case. That is how the algorithm works. It weights everything according to the slower time frames. So that's where we are on TradingView. And you can have as many as you like. I mean, you can have, well, as I say, as many heat maps as you wish. So that's where we are with that. Just drop that out of the way. Let's just go back to where we were on, on 6B 3 minute, I think. Let's just click on that for a moment. Let's see where we go. See where that's developing. There we are. And in a way, this just really reinforces the whole strength of having indicators that help to keep you in. The one thing that most traders have a problem with, I wouldn't say all, but I'd say 99% of traders, a pretty high percentage, it is actually staying in the trade. It's not about understanding how the markets work. It's not about your trading ability. It's about staying in a trade once you've got some profit in it. Because if you got in somewhere up here, your reaction when you get to here is, if you've got some profit and it's starting to dwindle away, your immediate reaction is to get out and close the position. And if you do that constantly, then all that's going to happen is your trading account is going to be waterlogged. It's not going to move forward. It might sort of slide backwards slowly, or just flatline all the time, because you're basically weighing small losses, a lot more small losses, with fewer smaller wins. So you are going to go backwards gradually over time, and that's the nature of the business. It is the mathematics of trading. There is no way around it. You have to make bigger winners to outbalance the smaller losers, of which there are more, that you take all the time. It's a fact of life. And if you can find mechanisms to help you stay in a trade, one of which is an indicator such as this, I mentioned it here, the trend dots have changed color, yeah, but the trend monitor hasn't. It's kept you in there. Then you start to apply VPA to all this, and you start to see the selling coming in down here again, once again confirmed with the volume and pricing agreement, a little bit of buying coming in there, but it carries on still. Now we're coming down to a low volume node, and it's just kept you in through that whole trade. Now, the other powerful mechanism that we teach in great detail in the Forex program is the application of VPA in terms of understanding whether a reversal is a primary to primary reversal, in other words, from a bullish to a bearish, or bearish to bullish change in trend, or are you actually looking at nothing more than a minor reversal or a minor pullback? It's an absolutely fundamental plank of trading. It is one of the most powerful applications of VPA, which is why we concentrate so heavily on it in the program, in the technical analysis module itself. So it's nice to have a look at that particular trade. And obviously what that's also just visually, when you look at obviously up and down the table here, you can see that's pretty much going on across the pairs. So you know for a fact, this buying of the dollar that we've got here going on is pretty much universal, stronger in some, less strong in others, but that's what's happening at the moment. Are we setting up for reversal? My eye is always drawn to the top and the bottom, as you well know. Let's just drop that out of the way. Here we are. This is on the Ninja Trader on the various multiple time frames. Yeah, I can go to cable. Not sure what I've got on here. I've got the CAD Swiss on here. Change this over to, yep. Let's just change it over to cable on here. There we go. This is the move we were looking at on Tradestation a moment ago. Where are we? Let's have a look at the various time frames. Where should we go? Let's go to 5. Pop that up full size, nice and easy. Again, okay, this if you're looking at this from a VPA perspective, you're trading around the volume point of control. So you've got to expect either congestion or you're waiting for that to pull away. You get this candle comes in here. Is this strength or weakness? Well, clearly it's not strength, because if it were, and that were buying, then that candle would be certainly of similar size to this one and would have closed at an up candle. It hasn't, it's closed as that shooting star candle there. We come through the volume point of control. There is some congestion. What we're seeing now in terms of the reason for the pause point is very clear to see, and it's on support and resistance from the accumulation distribution indicator, which is here, which works on price. And the beauty of the indicator is that it presents these levels, and in fact, it reminds me that on the Trading View version, that will also be the case. So you will have this on Ninja Trader, you will have it on Tradestation, and you will have it on Trading View working the same way. It basically paints these levels as they are. In other words, the strength of that level or the weakness of that level. These little levels up here, they are similar. They're levels where a price has been tested and held, but they're not strong. And the reason they're not strong is tell straight away without even seeing the numbers. This says 2, 1, this is 3, this is 2, 1, 2. And they're presented in this visual way to show you that they are relatively weak. Now, where they become slightly stronger is where you get little clusters of them. We had a little cluster of 3 here, we had a cluster of 2 here. What we have here is a cluster not only of 2 levels, but of 2 very significant levels. These have been tested multiple times. You can see it's actually sat on there, pinpoint accurate on the thing, and below it we've got another one. So for this pair to move through this region, this is going to take some serious volume, because this is a key level of support and resistance. You can see how it's impacted over here when the market reversed, tested, and then carried on up. Now it's coming into play for different reasons. It's acting as a platform of support. If the market is going to carry on lower, if it's going to break through there, it's going to take some volume. And the good news, if you're short this particular pair right now, is that once you break through this level, we then start to look at support and resistance through the prism of price, which is based off the volume point of control, because the volume that sits in this area is pretty low compared to the volume that sits in this area up here. It works in exactly the same way as does price-based support and resistance. It's just viewed through the prism of volume. Because if you think about it logically, if the price is going to get down into the regions and there's very little in the way of old orders, orders that are waiting to be executed, etc., then why would the price not move through there fairly rapidly? Conversely, if we get back up to somewhere like here, the volume point of control, it's a massive amount of volume up there, right for the end of the chart over here. That is the heaviest concentration of volume. If the price reverts to the VPOC, then you expect it to stay there for some time, because you've got a huge amount of volume sitting there and it is a significant level. So where you have high volume, they are significant levels to the market, and therefore you can expect the market to pause there. Where you have low volume, as you have below here, or relatively low at any rate, then you expect the market to move through there pretty rapidly. And that's why volume is so important from a trading perspective, because it will tell you what is going to happen next. It's in a similar way, it's a similar vein of thought to, we look at this volume down here to tell us what is going to happen next. But equally, when you look at the histogram on the right-hand side of the chart, it too tells you, because if you're coming down to an area, if say we're coming up to this area here, we're coming up to an area of low volume, there's a low volume node and we're moving through here, you expect the market to move up through there pretty rapidly, because there's very little, there's certainly no price-based resistance there, and you've got very little volume-based resistance as well.
David, sorry.
Yeah.
There's a really nice question from someone, the difference between the rankings on the matrix and the array.
Right, okay. I will answer that. Leonardo, thank you for that. Sorry, I always have my chat box closed when I'm in full rabbit mode. Apologies for that. The difference between, let's go to, right. Let's go to the matrix. Here we are. Oops. Almost shut the thing down. On the matrix, there is no weighting element. There is no there's no weighting of time, because you're looking at these on individual time frames. So what this is telling you in terms of a 1 minute time frame, I've got 1, 5, 10, and 15 here. On the 10 and 15, we've got the dollar Swiss is at the top. So it's telling us, if we isolate out on the dollar, it's pretty much telling us there, see what's doing over there, over onto there, and over onto there. So if you isolate out on the dollar, what that's telling you is that pretty much universal buying of the dollar at the moment. It's not entirely consistent. It certainly is on 5. We want to see the dollar yen move up, but don't be surprised to see the dollar yen in different positions, because the dollar yen does not act in the way you think it would. We explain it in huge detail in the program as well, because the dollar yen is not. It's a currency of two sentiment currencies, if you will, and therefore does not behave in the way that all the others will tend to behave in. So don't be surprised to see the dollar yen sitting outside the sort of general flow, if you like. But basically what you're doing here is there is no weighting to this particular matrix. So the ranking that you're seeing here is purely based on what these currency pairs are doing amongst one another across the various time frames. So it tells you where they are in the ladder, when they're getting to extremes, and it tells you whether the sentiment per se is universal across that particular matrix of currencies on that time frame or not. If you go over onto the currency array, the weighting element is included here. So this, sorry, are we talking about the matrix? Sorry, I've lost my thread. Were we talking about the matrix and the array, or the matrix? Yeah, the matrix and array. Apologies. Right. Right. On the different, right, on the, when we go to the array, sorry, I was losing the thread with the matrix. On the matrix, you've got weighting. On the array and on the heat map, you have weighting on the ranking. On the array and the matrix, there is no weighting. The difference between the matrix and the currency array is one to do with the time aspect that you're looking at. And if you think of it, these two indicators in terms of exactly the same way as the trends and the trend monitor, the currency matrix works very close to the market and therefore will tend to signal changes much more quickly. The currency array takes a more considered view of the price action, and therefore they do not change quite so fast. And what the currency array shows you is obviously not only that, it shows you the strength of that trend visually in terms of those currency pairs, and it also gives you the ranking ladder in terms of the overbought and the oversold signals coming up to here on the second ladder. So in terms of how to use the indicators, the matrix you have very close to the market. It is a precision tool, if you will. It's like the trends. It will work very close, and as that sentiment changes and as price action moves on the chart itself, you will see that reflected very quickly on the matrix. What the array does is takes a more considered view of it and steps back from that price action and therefore changes less frequently. So again, it's a question of using them in combination to give you that perspective. And in terms of timing, if you like, you You can start with the CSI, you then step on to the matrix, which is your mid time frame, and then out to the array, which looks at it from a slower perspective, if you will, in that sort of combination. So that's how to use the indicators. They are very much designed for that approach, in terms of the matrix being like the trend dots, which is very close to the market, and the array, which steps back. There's no weighting element involved in either of the indicators. They are purely based on how the currency pairs are reacting against one another on that particular chosen time frame. The only weighting that comes in is on the currency heat map over here, where the weighting element of time, this aspect of time up here, is then built into this ranking ladder down the side. So where you have a chart like this, or an indicator like this, where you've got a very slow time frame, like a week and a day, these will move very slowly. These might only move one slot, maybe 2 slots on a day. So if you're a much slower term trader, you're looking at longer term swings, then this ranking ladder down here is perfect. You'd set this up on the day and the week. And if you're looking for reversals in terms of trend on those sorts of time frames, then that's the way to use that particular indicator. And obviously it gives you all the other cells as well there, which is drawn off the currency matrix. Hope that answers that one for you. Let's just go back onto the charts again. Let's just go back to the majors. This is the majors matrix, similar way to the currency futures on the Tradestation where we started, where it just gives you a straight through view in terms of the dollar. But obviously you've got to bear in mind that we're now on spot markets here. So this is dollar CAD, this is not CAD dollar, so that's the inverse. And the same with the dollar Swiss. Having said that, what this does give you when you're using a matrix in this way, it's really nice to get an inverse view on spot, because you get the inverse price action here will give you different aspects on the volume price analysis relationship. If you're looking at that in terms of this one rising, this one falling, it's always nice to get an inverse view, and just gives you a different perspective. It also gives you different indicators which appear. You'll see volatility triggers which will appear on one and maybe not another, and just gives you a little bit of confidence or a heads up that something is changing somewhere. And it's all about looking at the little pieces of the jigsaw, how to use the information, how to use the indicators, how to use the charts, and all the relational stuff. Anna started with bonds. I mean, we've been talking about bonds for goodness knows how long, 12 years or whatever it is. There's a huge section in the education program on bonds, so you really understand the bond market, because it is mega. It is so important. But very, very few traders ever look at the bond market. And what's curious is we are also getting a lot of students who are coming to the Forex education program and trading stocks. And we say the same thing to them, say, look, why do you not follow the Forex market? The Forex market is central to the whole business. This business is only about one thing, and I've said this so many times, it's about sentiment. This market only moves on sentiment. There isn't anything else. It's either risk on or risk off. It's money seeking higher returns for higher risk or lower returns for low risk. There's nothing else. So if you put it all together and understand the relational aspects of market behavior, you will become a very successful trader. It really is as simple as that. And if you can find that mechanism to help to keep you in the trade, you will make money. Surefire. It's just finding, understanding, pulling it all together, and then finding ways of keeping you in the trade once you've got profit in the bank. Right, we've run over a little bit, so I'm just going to wrap up very quickly, just to point you where all the bits and pieces are. This is the education program. As Anna said, it now includes the funding program. This is only open for students. Sorry about that. That's what we decided at the start, and we're not changing that particular agreement. That that's what we want to do, because we want our students to have the option to trade the funded program, because once you have that knowledge and you've been through the program, you have the confidence to trade large money accounts. We wanted to give our students that opportunity. It's our money, so you're not trading your money. There's no risk to you. There is a cost of entry. It's a few $100s. You decide where you want to start. You can either start at, let's click on there, you can either start at the $5,000, $10,000 or $15,000 level. There are 3 levels you can start at. Let's say, just scroll down the bottom here, wherever it is. There we go. 5, 10, or 15,000. That's your starting point, your evaluation starting point. And once you've passed a very simple target based level that basically tells you you're a consistent trader, and you've told us, or you've proved to us that you're a consistent trader, you've proved to yourself that you're a consistent Forex trader, then we move you up to the next level. We basically multiply that by 4. So if you start with a $15,000 account, you move up to 60,000. We give you a kickback of a percentage profits all the time. 35% at the evaluation level comes back as a lump. Once you move up to the next levels at 60,000 onwards, you get paid at 50%, and that's paid monthly back to you. So you're remitted back monthly. You're earning a monthly income off your profits. So it goes 60,000, and then we double it. So we go 60, 122, 44, 80, 960, right the way through to 2 million. You get the profits back. We've introduced some exciting changes recently. You can only trade spot Forex, the 28 pairs on spot Forex on the evaluation stage. But as you can see up here, once you start to move to the portfolio manager stage, you can also trade S&P 500, UK, FTSE, dollar, tech, German, and also gold. So it broadens things out for you, and you just move your way up through the levels and on, earning as you go. Simple as that. In terms of the complete Forex program, it's a huge, huge program. I think there are something like 450 lessons. There's 250, 300 hours of video there. It's huge, but it gives you all you need to know to trade this market with confidence, and all the platforms there as well. You'll find all the analysis here at annacooling.com. All the books are over on Amazon in either Kindle or paperback version. You'll find them all there, and all the links to various sites there too. And in terms of where you'll find all the indicators, they are here at quantumtrading.com, MT4, Ninja Trader 7.8, TradingView, and Tradestation. If you have the Tradestation full package at the moment, good news for you is you'll get all those indicators free of charge I mentioned earlier on. It's just the way we work. And that also applies to if you invest in any of the other platforms full package, you will get all future indicators we develop free of charge as well. If you have any indicators from if you've bought in the past, you want to upgrade to the Forex program, or indeed upgrade to a full package, we always give you a credit for what you've spent with us, and credit that against whatever it is you want to upgrade to. So if you've got some indications you want to join the Forex program, fantastic, we'll give you a credit for those as well, no problem at all. Tradestation there now, you've got Tradestation 9.5, which is the one I showed you earlier on, driven by Interactive Brokers, which is a great combination, or this Tradestation Securities, which is on Tradestation version 10 and above, which you'll see later on this afternoon. So that's it. Thank you very much indeed for coming along today. Hope you've enjoyed it. We will be back at what time are we now? Just gone 12. We were back at 2:15 with the stocks on Tradestation. So enjoy the rest of the trading session, and stay safe. Hope you're all well and staying safe in these difficult times. As forget who it was, Michael said, I think looking forward to a holiday. I think probably everyone else is. So stay safe, everyone. Thanks very much indeed for coming along today, and we will see you later, and bye for now.